Claims rose by about 4,000 last week to 212,000. At the same time, continuing claims actually fell by 31,000 to 1.83 million. And the unemployment rate, that's expected to hold steady around 4.28% for February. So this still looks like a stable, what some call a low hire, low fire labor market. Joining me now is Jeffrey Small, partner at Retirement Income Source in Melbourne, Florida. Jeffrey, welcome back.
Thank you.
What does today's numbers tell you about the strength of the labor market right now and the broader economy?
Well, I think it's a resilient labor market. Despite the cooling on job openings, Alicia, we had about 9.5 million jobs open in 23. Today, we've got about 6.5 million. Not a lot of hiring, not a lot of firing, as you said. Means that wage growth is going to be moderated. It's not going to cause any inflationary flare-ups. But the economy is resilient. The jobs market is resilient. There's still 6.5 million jobs out there that people need to fill. And so we still have a need for employees, basically, but everything's remaining static. And so as far as inflation goes, it looks good. We're trending down 3 straight months in a row. We're at a run rate annualized at 2.4. So we're just above the Fed benchmark to be a consideration for lowering rates. But as far as the economy goes, the economy is very stable. The markets are not stable. They're responding to instability today, but the economy looks very good this year. 2 to 3% GDP run rate in that range. Could be higher, could be lower, depending upon how much of the reinvestment actually occurs in 2026.
Yeah, looking ahead to 2026, which sectors do you see leading job growth in 2026, and where might we see some pullbacks?
Well, obviously, industrials, materials, and energy are really where all the growth is going forward due to the AI center build-out, the data center build-out, and all the investment in tech. As far as weak spots go, I think you could see potential layoffs in financials and also in tech as companies look to tighten their belts from the amount of money that they're spending. They seem to be spending all of their free cash flow, at least the hyperscalers are. And that is really concerning Wall Street. And one of the reasons why stocks like Microsoft have pulled back 25%, and one of the reasons why Meta has pulled back 20% as well. And so when they spend all of their free cash and they don't have any profit and they get going to debt to spend more money to reinvest in technology that is somewhat unproven yet, it's all a big bet. That makes the market unstable, and that's kind of what's going on today.
When it comes to the average American family and real pay, Vice President J.D. Vance said today that real pay on average is up about $1,400 over the past year, just 1 year. Can you hear me, Jeffrey?
I got you loud and clear.
Okay, but he also pointed out that BLS data shows the average family lost about $3,000 in purchasing power under the previous administration. So let's take a step back here. Do you think families are still digging out of a hole? Do you think that's the right way to look at it?
I do. I think it's the right way to look at it. I mean, there's been a pretty big swing in household income from one administration to the current administration, from tax reduction, from energy costs going down. The tax savings obviously is a huge deal. That averaged about another $5,000 or $6,000 per year of free cash flow for folks in their households. And so we just need inflation to keep trending down, for energy to keep dropping, which will affect all the wholesale prices of what consumers have to pay for today. And that's kind of where we are today. But meat is finally starting to come down. I think we're all tired of paying really high prices in the meat industry, the meat markets. Nobody really buys meat anymore because you can see how they've marginalized or shrunken the meat selection departments in a lot of grocery stores. You walk in there and say, where's the meat? And it's like looking in the closet of meat, basically. There's not a lot of room there. But because nobody's buying it, it's too expensive. So prices are starting to finally correct.
All right, Jeffrey Small, partner at Retirement Income Source. Thank you for your time today.
Thank you.